Is this number that you have produced today, the 8.7% contraction, a warning shot to European leaders that they need to make sure next week when they meet that they come up with a rescue plan, a rescue fund for Europe? Is this just further encouragement that that needs to happen?
Indeed, if we look at European Commission's summer economic forecast, it shows a somewhat deeper recession than previously forecast. As you mentioned, 8.7% for euro area and 8.3% recession for the EU as a whole, followed by 5.8% growth next year. But in any case, we see that recession is deeper than previously forecast, and indeed it underlines the need for ambitious and coordinated EU response. We already took a lot of measures for the immediate crisis response, and we see that these measures are bearing fruit. For example, if we look at the unemployment rates, those are not as bad as we were fearing. We see that the measures which were taken in member states and supported by the EU to mitigate unemployment risks were giving its positive results. But now we need to concentrate on the economic recovery, and that's indeed, it's very important to reach timely agreement on EU economy recovery plan, where, as you know, European Commission has come forward with an ambitious proposal of 750 billion euros economic recovery plan.
Will it? Will it come up with a comprehensive move forward?
As regards the move forward, I already mentioned a number of measures which had been taken already in terms of allowing EU member states all the necessary flexibility to react on the crisis with EU fiscal rules, with state aid rules, with prudential rules, measures which had been made to mobilize fiscal and financial support somewhere in the range exceeding 3.4 trillion euros, and that's besides the action which European Central Bank is doing. So there had been a lot of measures taken as an immediate crisis response. And now, indeed, we need to look how we can stimulate economic recovery. And that's where our economic recovery plan, Next Generation EU, comes in. And what also we want to achieve is that our aim is not now to just go back to the pre-crisis status quo, but indeed, with this economic recovery plan, also facilitates a green and digital transformation of European economy.
Mr. Dombrovskis, we have a Eurogroup meeting this week on the 9th. We've got the summit on the 17th and the 18th. Where do you see the best chances of compromise to get this deal over the line? The Frugal Four, led by the Netherlands, are concerned about many aspects of what you proposed. What compromises can you see happening? The EU is very good at finding compromises at the last minute. Where do you see them emerging?
Indeed, compromises will be needed because EU budget and also our EU economic recovery plan will require unanimous support of EU member states. So that's why negotiations already, so to say, pre-negotiations are ongoing very intensively. European Commission is reaching out to member states. Council presidency is reaching out to member states. Just a few days ago, the German presidency on EU Council started, and German presidency is also very determined to reach agreement on both EU multi-annual budget and the EU economic recovery plan. There are compromises which we are also assessing how we can facilitate agreement, looking at exact conditionality, how money will be available to member states, ensuring that it's aligned with the priorities outlined in the European semester, where we coordinate EU member states' fiscal and macroeconomic policies, looking at rule of law conditionality, For a number of countries, so-called rebates, how much they, so to say, how much their payments to EU budget are being adjusted are important. So there are a number of elements which can be discussed. But what is important is that we preserve ambitious European response because it's a major economic crisis, so it requires ambitious European response and response in a spirit of European solidarity.
So back in 2011, 2012, the trade-off was austerity. That doesn't seem to be in the conversation this time around. But when you have the peripheral countries like Spain, Italy, Portugal, still the ones hit the hardest, how are you going to get the Frugal Four and everyone on board? What's the difference?
First of all, the nature of the economic crisis is very different. So we cannot attribute to the fiscal or macroeconomic policies in member states. All member states are facing symmetric economic shock coming from the pandemic and lockdown measures associated with this. From that point of view, what is important is to preserve productive capacity of EU economy, to the extent possible, preserve jobs in Europe, preserve European companies, because the more we are able to preserve the capacity of the economy, the faster European economy can rebound after the crisis. So that's the basis of the strategy, and that's indeed why we are recommending that member states take necessary measures to support their workers, to support companies, and to support, to the extent possible, capacity in the economy. So that's one major difference, and no one is really questioning this approach. And what is therefore also important that when we come with a European response, that we do not deepen economic disparities between or among EU member states, because there are some member states whose high debt levels are limiting the possibility for a response. There are countries whose overall economic development and income levels are substantially lower than EU average. And of course, we cannot leave these countries behind. That's why we emphasize that this European economic recovery plan has to be ambitious and has to have strong grants component.
The Frugal Four argue differently. They say that this is going to create moral hazard, that we are going to see countries behaving inappropriately, that the grants component should be whittled down. What do you say to the Netherlands and the other members of the Frugal Four about that? Why do you think that they are wrong in encouraging behaviour that they argue is necessary to ensure the long-term health of the Eurozone, rather than just kind of providing a short-term fill-up that will get us through this crisis? Isn't there a long-term message here that needs to be communicated about how money is spent and the way that money is spent, and the fact that it should be spent properly on things that are going to provide long-term benefits for the region?
Indeed. First of all, we need to understand that European economies are strongly interlinked. So if we are leaving some countries behind, it's going to negatively affect also other EU countries. So that's why we emphasize that our next multi-annual EU budget and European Economic Recovery Plan should continue to foster the process of convergence among EU member states and should not lead to widening divergences. Second, we have enacted the temporary state aid framework, allowing EU member states to support their companies, viable companies which are in difficulties due to the COVID crisis. But we see that the member states' capacity to respond is different, and there are member states which can afford to provide more substantial support to their companies. But this is affecting level playing field across the EU, and we need to rebalance this. And our EU economic recovery plan is the way also to rebalance this difference. So from that point of view, it ensures better level playing field. We already touched upon moral hazard. We don't think that we should be discussing moral hazard at current stage because this is a external economic shock which comes from the pandemic and lockdown measures. So all EU countries are affected, and indeed all EU countries are in the recession.